Good morning, everybody, or good afternoon, wherever part of the country you're at. Thank you for joining us today. This is our very first Facebook Live feed, so we had a little bit of a glitch, but now we should be up and running. And first of all, I want to introduce myself. My name is Monty Tarnall, and I am recently a new team member here at Back 9. I joined earlier this month, and before that, I spent the last 25 years as a disability income specialist with Guardian Life Insurance Company. So I've worked with pretty much every disability company out there. I've worked with benefits from $500 a month all the way up to $100,000 a month. So today we just want to give you kind of an introduction to me and teach you about the need in overcoming objectives to disability insurance. One of the things I want people to get today out of this meeting is just that give you enough information to feel comfortable about talking about disability. You don't have to necessarily understand how the products work right now. You just have to have the answers to some of the objections they have to build credibility with yourself. And that's what we're going to talk about today, because there's really three key elements that you're going to get objections with. One is going to be price. Another one is a big one, which people say, I'm already covered through work. And some say, well, I have Social Security benefits, so I will rely on them if I have a long-term disability. So we really want to get into that. And again, I don't want you to think you have to be an expert in disability to bring up the conversation about disability. If someone does ask you a question about which carrier you recommend or the pricing, you say, you know what, I just want to gather some information today. And I'm going to come back and bring you a presentation, and we'll discuss what carriers I would recommend that's the best fit for you. So when we talk about income, and it's really your foundation, everything that you're working, you go to work every day and you generate an income, and everything is supported by that. Your home, your family, your savings, and luxury items like travel. Anytime you have a stop of workage and you get a crack in your foundation, everything could potentially collapse. And one of the big ones I like to talk about is your home. They say there's an estimate that 50% of all foreclosures of homes are because of a disability. And it's a big number, but I like to look a little deeper into that. When you're talking about someone's home, you're talking about could be in their family for 150 years. This could be a home that their dream home that they bought and moved them out of a family, a place where they weren't happy with, where it was dangerous, a different neighborhood. Some of them may have built themselves, and unfortunately, they've done everything they can to save their home, and we don't know where they are now. I mean, if you think about it, if somebody lost their home, most likely they probably went through their savings. They did everything they can to keep that home. And now, not only do they not have a home, they don't have an income because they're not working, and they have most likely went through their savings. They could be living with the family. They could be living with friends. You know, it's such a sad situation. And if we went back to all those people and said, hey, if I came to you and I said, you know what, if I was here 2 years ago and I said, you know, for $250 a month or maybe $500 a month, I could have saved everything. I could have kept your family in the same home. I could have kept your savings. You could still go on vacations now and then. Would you be willing to pay the $200 or $250 or $500 a month? And I guarantee you they would probably say, I would pay double or triple that. I'd even work an extra hour a day just to generate enough income to cover that disability coverage. And that's really what we're talking about when we're talking about disability, is that it's the foundation of everything. And we also like to look at, you know, what really causes a disability. And one of the big things is that 10% up there. Most people, when they are thinking about a disability, they're thinking of an injury. They're thinking of, you know, oh, I'm going to the gym, I pulled my back out, or I broke my leg skiing. But the truth of the matter is, when you're talking about injuries and illness, it's only 10%. And when you're talking about someone that says they have workman's comp, first of all, workman's comp only covers you during working hours, which is basically about 25% of your time is working, and it only covers injuries. If you had cancer, your workman's comp is not going to cover your treatment for cancer. It's non-work related, unless there was some way that you could prove the chemicals in your work then, so when you're talking to someone about what they are, what's a disability is caused by, and most people in their minds will think of an injury. And the truth of the matter is it's a illness. And we have a list of, these are the top 5 illnesses that disabilities are, that most people on disability claims have. And the first one, the musculoskeletal, is one that most white collar professionals will think of, like an attorney, or you're talking about people in the finance business. Because if you talk to them about disability, I don't need disability. There's nothing that can stop me from working. If I can pick up a phone, I'm going to be making a living. Well, that may be true for them, but there's 4 other illnesses that could occur that I guarantee you're not going to be able to go to work. And that's your nervous system. You could have a stroke, you could have MS, you could have Alzheimer's, you could have a heart attack, you could have cancer, you could have a dramatic situation that happens in your life, and you're now under a stress claim, you have depression. Any of these things are going to stop a person from going to work every day. And you can say, hey, if you're having cancer treatment, let me ask you a question. You're going to go home from a treatment and you're going to be tired. You're going to be sleeping half the day. You're going to tell me that you're going to go to work every day? So when you're talking to people that think they don't need it because their job is just their minds, there's so many types of illnesses that they can actually get that would prevent them from working. So don't ever let somebody talk to you and say, I don't need it. Everybody needs it. If the illness they have, or the injury they have, is something that's going to stop them from going to work, stop them from generating income. And then we also look at, hey, if you did become disabled and you lost your job, let me ask you a question. What other source of income do you have? Most people would say, well, they're going to look at themselves and they're going to say, well, I have savings, I have assets. Well, great. No longer are you adding to those for your retirement, maybe for your kid's college fund. Maybe you want to start a new business. Now you're using that to pay all your expenses, your monthly expenses. Borrowing, who's going to loan you money? If you go to a bank and say, I'm not working right now, but I need to borrow money, they're going to say, thank you, next. Or if you look at your house and you say, I have a lot of equity in the house, I have a line of credit in my house, well, that's great. You have no income to replace any of that you're borrowing from your house. And now your monthly mortgage has just gone up because now you're borrowing additional money, which eventually, if you're unable to return to work in a period of time, this is where we have foreclosures that happen. Social Security, we're going to talk a little bit that, because a lot of people are under the impression that if they have a serious long-term disability, that Social Security or state disability is going to protect them. So we're going to talk about that. We also have, you can go to your families and friends. And again, you can ask yourself, if one of your friends came to you and said, hey, I'm not working, I can't work, can I borrow some money? It's no longer borrowing money. You're giving them money, because you don't know if they're ever going to be able to pay you back, because not only they're borrowing money from you, they're probably borrowing money from a lot of different people. And your family, look, I'm sure plenty of families out there can help people, but for how long and for how much? The last thing is employee benefits. And this is a big one, because a lot of employees, when they have their benefits at work and they say, I'm covered, I don't need disability. My employer already covers that for me. So we're gonna look into that one as well, because that's a big one. And this is a really great tool to use. When you're sitting with one of your clients, most of them probably don't even know what their monthly expenses are. They get their paychecks, they pay their expenses, and they hope there's a money left over. But if you ever sat down and put pen to paper and wrote everything down, that's a great basis to start. Because if they see a number and then they start realizing, wow, how am I going to pay for that? And then we start looking into the other sources, the benefits they have at work. Maybe they do qualify for Social Security. How much can Social Security pay? So this is a great tool that I always recommend using, because it puts a real number in front of a person that they probably never even sat down and wrote. So I highly recommend sitting down with your clients and talking about, let's write down all your expenses, and that's at least a great starting point. What's your income worth? This is a big number too, because when you're talking about somebody who's disabled, they're really thinking in months. They're thinking weeks or months, maybe a year. But we take a 40-year-old in this situation, and he's making $150,000 a year. We're going to have the assumption that his income is going to increase over 3% every year. We're actually talking about $5.5 million of potential income that this individual could potentially lose if they were unable to return to their job. Now, there's different types of what can you return to? Can you return to the job that you were making $150,000 a year? Or are you unable to do that? Now you have to get into another profession that's maybe earning $50,000 a year or less. So that's a huge number, and we're gonna dig into it a little bit more on that one. And here's an example. Here's somebody that you're gonna meet with them, and they're gonna say, I don't need disability, I have it through my work. Great. You know what? That's a great benefit you have. Most people don't have. Maybe 25% of the people out there have some sort of group disability from their work. It's usually the bigger company. So, okay, you make $150,000 a year, and I just reviewed your group plan. And by the way, I'm always available to review group plans for people. I do it all the time. So if you have a group plan and you're unsure of how to read it, you send it to me and we'll work on it together. So, and I can explain it. They're very easy to read and they're very easy to understand. This particular one covers 60% of your salary. And it's got a $10,000 cap. The cap basically means is the policy will never pay more than that. This individual's income is a little below that, so once he reaches $200,000, that's going to be the cap. If he earns more, which we're going to look at, none of that income is going to be covered. And one additional thing you should know is that most group plans, there's two things. They don't cover some, not all, it depends on the company, but some don't cover bonuses, some don't cover commissions. So if you have someone that their base salary is $50,000 or $100,000 and they're making $300,000 and their policy does not cover that, they're only being covered for that base salary. So that's something you want to look at. And and it's, in this case, we have employer pay. Oh, the other thing I was going to say is that a lot of them don't have inflation riders, and I'm going to talk about that as well. But this particular one, hey, it's a great benefit. The employer's covering 60% of your salary. They have a $10,000 cap, and they're paying all the premiums for you. So we have two employees, A and B. One of them is going to work till age 65. It's going to make $150,000 this year. It's going to increase 3% annually. His potential benefit, like we showed you on the previous slide, is almost $5.5 million. And we're going to say, all right, well, he's probably taking home, we're just for assumption reasons, we use a 35% bracket. So over his next 25 years, this person's take-home pay is going to be about $3.5 million. Now we want to look at employee B who gets disabled at 40. He can no longer work ever again in this occupation. And we're going to look at what benefit he's going to get. He makes $12,500 a month. His policy is going to cover 60% of that. So we have $7,500. Now, because the employer paid the premium, the IRS wants a piece of it. So they're going to pay tax on that. So they're going to receive approximately $4,875 a month. That's it. And if they don't have an inflation rider, that amount's never going to increase. So if we go back to look at when we sat down and filled out their monthly expenses, they can say, oh, well, that's fine. That covers my monthly expense. Well, it does today, but there's inflation. Your rent's going to go up. Your food costs are going to go up. Health insurance is going to go up. Everything is going to go up. So today, that may cover it, but what's going to happen in the future? And if we look at employee A and employee B, when they both reach 65, employee B, because he was disabled, basically has a $2.1 million gap of the coverage. And what I always say is the more income you earn, the bigger the gap loss becomes. And we're going to look at somebody that makes $300,000, same company. He has the same exact benefit, but he makes $300,000 a year. And the significance of it is the cap, that $10,000 cap. So we're going to look at employee A. Again, he's working all the way to age 65. Why employee B gets disabled. The employee is working at 65. Again, we're just going to use, assume 35% tax bracket, but he's going to gross about almost $11 million, and his take home is about $7.1 million. Employee B, because he had a cap of $10,000, that's the max the plan's going to pay him, and the government's still going to tax that, so he's going to receive $6,500 a month. Again, if they don't have an inflation rider, that's it. He's going to receive the same check every month. Either he returns to work or the policy expires at age 65. This particular employee has a $5.1 million loss of income, even with a great group disability plan in place. So when you talk to your clients and they bring up, I have a group plan, I don't need coverage. These are things that this already makes you more credible. You don't have to even know the contract itself, because again, you just are gathering information, and then we go back and we talk to them. So let's take a look at a solution. Let's go back to the first one, $150,000 income. We're going to say his income is $12,500. Right now, assuming again 35%, he's taking home while he's working $8,125. He gets disabled. We go down to the next one, the group. The group's going to pay him $7,500, but the IRS is going to get a piece of that. So he's back to the $4,875. This individual making $150 has a $3,250 gap. Again, assumptions, but he may not even know it. I'm sorry, he or she may not even know it, but they potentially have this individual, this employee has their income just got reduced by almost $3,300 every single month, and it's never going to increase. The solution is we look at an individual disability policy. What we do is, it's very simple. We punch in all the numbers. This person makes $12,500. His group plan was going to pay him $7,500, and the company says, okay, on top of that, we're going to issue a policy for $2,580. And I wrote tax-free next to that, because if you pay your premiums with after-tax dollars, which I always recommend doing, the only way you can is if you have a business and you write it off through the business. But if you're paying it with after-tax dollars, every dollar you receive from your personal disability is tax-free. And there's a couple other features, but now we reduce your risk down to from $3,250 down to $670 a month. And we're even going to show you how to reduce that. So in the green box here, we just get an example. We ran an illustration for this individual. It's a male executive. He's a class 5 and he's a non-smoker. The company will issue up to $2,580. We're going to pay benefits matching his group plan, but you can even go higher. Some carriers can give you age 67, some even go to age 70, so we can even extend the benefits. We have what's called a partial disability rider. This is for somebody that can still work but only on a part-time basis. So they have partial of their income is being reduced, and we can pay a benefit on that. We have a future increase, because today the company's only offering him $2,580 because his income is $150, but next year maybe his income's $200 or $250, and we want to give him more coverage, and we don't want to have him go through, or excuse me, again, he or she have to go through a medical underwriting. We've already built it in, so all they got to do is send in their tax returns, their W-2s, and we can issue more coverage. And then, this is very important, the inflation rider. He's only 40 years old, this individual, this employee. It's just 25 years. That $2,580 is going to be increased every year by 3% while you're disabled. And I want people to understand that, because some of you out there sell long-term care, and long-term care, the inflation starts on the first year you own the policy. With disability, it only will come into effect once you actually once you go on claim, and in the first year after claim, that's when your inflation rider works out. And the reason for it is, if you put it on like a long-term care, the benefits could eventually far exceed your income. So that's why we have the future increase option, so you can increase your income as it goes on. The inflation rider will come into effect the first year after you file a claim, after you're actually approved for a claim. And now the potential cumulative benefits we've added to this individual is an additional almost $1.12 million additional. And what was the cost of that? In this particular one, because he was a class 5, which is one of the higher classes, these premiums will definitely change based on your occupation, and if you're a male or female. So this is just an example purpose, but it's $150 a month. So if we go back up to the top, whereas his current monthly income is $12,500, he's taking home $8,125. We'll reduce that by $150. And now we just put him in a situation where he's not, this particular male executive is not as concerned about this big gap that his group is going to create, because he didn't do anything. He assumed that his group plan was going to take care of him. By the way, most people, they only understand their group plans when they need it. So they're only going to review their group plans when they become disabled and find this out. You, as an advisor, can go in there and look at and talk to them and say, let's take a look at it now and see what you're actually going to get, and create a little need. That's a need. That's what we're trying to do. There is a need there. And if we go to the individual who made $300,000, his gap is far wider because, again, his cap on his policy was $10,000. So he's only his income went from $16,250 down to $6,500. So he has almost a $10,000 a month gap that he no longer is going to receive. Again, we ran numbers on that. What would it cost for this person? It would cost him additional $450. So instead of his take home being $16,250, maybe it's $17,000 or $15,500, $15,600. And now we've protected an additional $8,670 of benefit that could potentially increase based on the inflation rider. So when you're talking about group insurance, it really can make you sound like an expert if you say, let's look at it and let's discuss it. And then again, you can send everything to me. I've been doing this for 25 years, so I know how to read these. I can tell you exactly how they're designed, what their maximum are. Some policies are much higher than this. Some are 20,000 a month, some are even 30,000 a month, the size of the company, but they do have caps. And you could be talking to someone that makes $1 million a year, and their cap is $25,000. So now they have $1 million income goes down to $300,000 income. They have a tremendous gap. And don't think that people that make $1 million don't need disability. You know, most people's lifestyles increase as their incomes increase. So there's plenty of millionaires that live check to check. So don't ever think because they have these large incomes that they don't have a need either. It's sometimes more than the people that are making far less money. I talked about Social Security disability benefits, and a lot of people rely on this, and they think in the back of their mind that if they have a disability, that they're going to apply for Social Security disability benefit, and that'll take care of them. And by the way, there's state disability also, and state disability is only up to 52 weeks. So beyond that, if you have a long-term disability, you may get money from them, and the maximum you could possibly get from the state right now this year is about $4,800, and you have to earn over 100, and you have to have all these credits, and you have to have funded it in for a certain amount of years, and then of course you have to qualify. And anything farther than that, then you have to go to Social Security benefits. It's about 151 million people are eligible for Social Security benefits. That's basically 71% of all the workers are eligible for it. And if you look every single year, and these numbers start going up to 2.5 million new applications filed, and fewer than half are approved. So you're standing in line with 2.5 million other people that are filling out the same application you are. And I don't know how long it takes to get to someone's desk, but I'm sure it's just a wait just to get to somebody to review your first one. And 70% of those usually get declined. The first application gets declined. And a lot of times you have to hire an attorney to get involved. There's costs in that. And if you look at what I put in bold, the wait time to get your first check is 2.5 years. That's Social Security. And the average benefit right now is about $1,000. The maximum is $2,600. That's it. That's what these people, in their mind, they're going to be taken care of by the state or the government. And that is not true. And then we talk about the cost. You know, that's one of the big things. I looked at it. It was far too expensive. And we're going back to the example I did. In this particular individual, if he paid the premiums for 2 years, if he received just 1 month worth of benefit over the next 2 years, 1 month and 6 days, he'd receive all his premium paid back. And if we go down to 20 years, this individual, if he pays benefit for 20 years, and in any of the 20 years, he had a 1 year off because he was unable to work and qualify for benefits, he'd receive all his premiums back. And we can design these policies for whatever budget it is. They may have saw an illustration with all the bells and whistles on it, and they got sticker shock, and then they just got turned off for a disability. So we can design around budgets. We can design anything we want to. There's always a product for everybody. The only time that obviously you have a condition is when you're talking about health. And individual policies with health, you know, depending on it, and I always ask the advisors, the agents, to just send me, you know, give me a little background on their health. And the most important thing is let me know that the drugs they're taking, because that can tell a big story. And there may be a solution. He may work for a company with a lot of employees, or we have high risk carriers that we go to. So don't ever think that because they say I have an issue that you cannot get coverage for them. We do have a lot of carriers that we work with, and I know many of them. And there's a premium I know can be a stickler to some people. But remember, when I went back to people losing their homes, any of these people would pay an additional $200,000, $300,000, $500,000 a month to make sure they keep their lifestyle. And that's a big word too with these people, their lifestyle. Nobody wants to move if they don't have to. Nobody wants to change schools if they don't have to. No one wants to start rating their retirement plan if they don't have to. And disability protects all that. It's something that you should always be talking to your client about. I think it's a disservice if you're only selling life insurance, because if you think about it, what is life insurance for these? You're selling them an income replacement. The breadwinner of the family passes away. The insurance company gives a large check to the family. The family can pay off the mortgage. They can potentially now have the money for college fund and replace their income. What's disability? Disability is far worse because if somebody's unable to work for a long period of time, there's no large check. They still have to pay their mortgage. They can no longer fund their college, their kids' college funds, savings, any of that. So when you're talking about disability, it's a huge loss when you're not showing them that you're protecting all these other things, but you're not protecting your ability to work. And that is probably the most important thing that anybody around needs. And especially if you're unable to work, you still have to be fed. You still have to put a roof over your head. You still have to pay for your health insurance. You still have to pay for a lot of expenses. So when it comes to disability, I'm a huge believer in it. I've owned my own policy for probably almost 20 years now. I would never let it go because when you think about it, who is going to pay my expenses? Do I have to go out and start picking up the phone and have stress on my life? And that's another thing. A real quick, kind of a last note is, if you're going through a really tough illness, and say you had a heart attack or a stroke, I mean, the first thing the doctor is going to tell you is, oh, we need as less stress in your life as possible. And if you don't have an income, or your income is far below what your needs are, the first thing you do is stress. Money is one of the leading causes of stress. So when you think about it, how are you going to take your doctor's advice and not have stress when your entire days and night are trying to figure out how you're going to pay your rent, your mortgage, put your kids through college, or even your health insurance benefits, which you could never let lapse at this point. So think about it that way. I'm always available. I'm very responsive to get back to people. Back 9 is great. I mean, this is new, the use of this Facebook Live. I mean, technology is a big part of Back 9. That's one of the reasons why I joined them. And if any of you are currently using their system, you know about their quote and apply, which is the greatest thing, because you could be sitting on the beach in Mexico drinking a margarita and get an email that someone just filled out an application and an exam has been in order, and all you got to do is open up the email and do an e-sign. You don't have to do anything. You contact your client a couple times, getting follow-ups on the outstanding requirements, and it's done. So, I mean, there's a lot of things like that. They track everything in what they call a boss system. So every time you get an illustration saved, you can track your commissions, you can track everything. So that's one of the reasons I came here. But, you know, use my 25 years of experience. And call me anytime. I'm more than happy to help you. Don't think you have to be an expert in disability. I'm going to have other of these Facebook Live webinars, and we're going to talk more about product. I'm also going to talk about things like guaranteed standard issue. When you have 3 or more lives, these are also great when you have some of the lives that have some health issues. And these are really big cases. You know, we deal cases with some of the leading carriers, and we even go cases with Lloyd's of London. We've written $100,000 a month policies on individuals. So those are really great cases, but we're going to do those step by step. But again, you can call me. Once you have a potential client, we can talk about it. I can fill you in on all the details of the contracts, make you sound like an expert when you go out and see them. You don't have to be an expert today. Just gather the information, find out their occupation, find out their income, and then, you know, get their birth date, and then we can go from there. I'm going to end it now. If anyone has any questions, feel free to ask. And I'm going to bring back my, do I go back? So bring up my contact info so you can all have, email me, send me a call. I can't bring it. Okay.